I think we've passed the biggest risk. I think the brilliance of Bitcoin has been how surreptitious it has been. You know, how it has scaled, how we do now have in the United States, 55, 60 million people who own it. It has become an election year issue. When I
we got a crypto president running now, apparently.
Yeah, exactly. So what happened there? So you had I think what brought more Democrats along to vote for FIT, so Financial Innovation Technology 21st Century Act, FIT 21, 76 Democrats. Shocking. What brought them along, I think, were three things that Trump announced. Number one, he was going to accept campaign donations in crypto, Bitcoin. Number two, he was going to protect the right for self-custody of crypto assets, critically important to the community.
Ark Invest CEO Cathie Wood shares her positive outlook on Bitcoin and cryptocurrency in general. She is optimistic about a future with reduced risk from government interference, believing that Bitcoin has overcome its biggest challenges and demonstrated its growth and stealthy scaling. She mentions that 55 to 60 million people in the United States now own Bitcoin. In connection to this, she cites three announcements by Trump that are garnering more Democratic support for the Financial Innovation Technology 21st Century Act. These announcements include accepting campaign donations in Bitcoin, protecting the right to self-custody of crypto assets, and opposing the implementation of central bank digital currencies. With that being said, let's take a look at some clips from the interview with Cathie Wood. Before we continue with the rest of the video, do check out daily 5-minute crypto newsletter with all the latest crypto and Bitcoin news. It's a fantastic analysis of on-chain crypto data and breakdowns, and the best part is it's absolutely free. They'll cover expert predictions, breakdowns of on-chain crypto data, and any breaking news you need to know, all in a nutshell. Click the first link in the description and enter your email to join over 50,000 others in becoming a better crypto investor right now.
If you look at how the stock market's been behaving away from the Mag 6, it has been saying there's a problem out there. That's the first thing. So I think this might be a little bit more like the 1932 example, because it was still a tough environment back then. But the extreme, I mean, the concentration had gotten to such an extreme that when interest rates and inflation came down, because that was a problem back then, and we were on the gold standard, so they had to shrink the money supply. We have been shrinking the money supply this time as well. They had to shrink the money supply. It was a vicious recession, and you know the recovery wasn't a boom. So believe it or not, I think the environment is a little bit similar now in terms of interest rates coming down, inflation coming down, being the reason the market broadens out. Do I think we could have a correction in the market, 5 to 10%? I'd be foolish to say no. I would say that our portfolios have acted, because cash and cash cushion have been really the most important variables. Algorithms account for more than 75% of trading out there. They are very simple-minded, I think, and this has been why we've seen the concentration in the market. If you get algorithms basically flipping the reason they just move towards cash and cash cushion, that should benefit our strategy. That is what happened during COVID. We were hit severely. The market in 1 month going into COVID was down 25 to 30%, depending on the measure. We were down 46%. Then we went into the craziest period I've had in my career, as everybody knows. I felt very uncomfortable at the end of that. Late 20, early 21, we were just getting inflows hand over fist, and I just knew that was going to end badly. And I said, keep your powder dry on Bloomberg in an hour-long show. So I wasn't with Eric Schatzker, you may know him, and I knew it would. Today we're in exactly the opposite situation. We're now at rock bottom with our multi-omics really dragging down the flagship. Why? Because it is the platform earliest in its evolution. although our genomics or multiomics portfolio has 4.5 years of cash runway, market cap weighted, it doesn't matter. It doesn't matter. It's relative to everything out there, especially the Mag 6. They can't possibly compare. So I think, we're seeing outflows. And I think that's a mistake now too. I feel like just as bad about that, people selling at these levels, as I felt about people buying in late 20 and early 21. Once the Fed understands that this economy is not on automatic pilot and sees inflation, I don't know if you've heard about the price wars now. We're seeing Target, Costco, Walmart. We're seeing McDonald's, Wendy's, even Starbucks has a new low-cost package. I didn't realize until my way here that Starbucks traffic in the first quarter dropped 7%. We're seeing, and what has happened, and the reason inflation has been a little sticky here, it came down from 9% to roughly 3%, kind of sticky here. Why is that? Companies are losing unit growth, and they're trying to make up with it by pricing more aggressively. And the consumer is saying, absolutely not. So now we're starting to see price wars. It reminds me, and I had the same battle in the early 80s. I was very young in my career, and Milton Friedman was saying, you know what? Inflation is stuck at double-digit rates. Get used to it.
In other news, there has been a surge in cryptocurrency ATM installations worldwide over the past year. The number of cryptocurrency ATMs increased by 17.8%, reaching 38,279, close to the previous record of 39,541 ATMs set in December 2022. In 2024, there have been 2,564 new ATMs installed, a positive change compared to a net loss of 2,861 ATMs in 2023. The United States holds over 82% of the world's cryptocurrency ATMs, followed by Canada at 7.7%. Australia has seen a significant increase in installations with a 17-fold rise to 1,117 machines in the last 2 years and is on track to surpass Europe's total of 1,584 ATMs. Besides the US and Canada, other countries with significant ATM installations include Spain, Poland, El Salvador, Germany, and Hong Kong. Some other countries with over 100 ATMs are Romania, Georgia, Switzerland, Austria, and New Zealand. The global presence and growth of cryptocurrency ATMs have rebounded positively in 2024 after a decline in the previous year, with significant contributions from major operators and widespread geographical distribution. Now, let's get back to Cathie Wood's interview.
If you look at the NFIB, National Federation of Independent Business Sentiment, so this is small and medium businesses, the sentiment is as low as it was in 08-09, near the bottom. They can't get funding. The liquidity is drying up out there. If you look at consumer sentiment, and I realize headline numbers are, employment's fine and inflation's a problem. We disagree with those, and we have lots of statistics to back this up. Consumer sentiment, if you're in the lower income range, they were hit hardest, of course, by inflation and interest rates and availability of credit. So their sentiment is back to near the lows in 08-09. If you look at middle income now, this category is the biggest swing factor in terms of the economy moving one way or the other. Middle income sentiment, and this is measured by the University of Michigan, is capitulating and moving down. It's not as low as low income, but it's moving down. Even high income has tipped over. And one of the reasons is the unemployment rate is going up. It's gone from 3.4% in January of 23 to now 4%. And consumer savings, stimulus savings, they're done. The consumer saving rate is down to 3.6%. We haven't seen that since '08.
Wow.
So, I think when you peel the onion, and it is very interesting, the one variable out there that we're watching that does not seem consistent with this is spreads between corporate yields and treasuries, especially spreads between high yield bonds and treasuries. Those have just turned up. Those have just turned up. So, we see a lot of warning signs out there, a lot of fear, and a lot of crowding into a certain ilk of stock that not only has cash and cash flow, but that people believe are going to win in this new AI game. And this is where we come down to this discussion. The Mag 6, Magnificent Six, everybody knows that expression. Many people, many investors, analysts think that the data aggregators, which they are, who have centralized services, are going to be the big winners here from generative AI. And we think in the short term, there are going to be some interesting features and functionality. But if we're right, and AI is the most disruptive technology platform in history, then it is not going to be in the category of sustained innovation, which is what I just suggested. It is going to be truly disruptive, and the spoils are going to go to, we think, a different group of companies over time, not the incumbents. It is so interesting to be in an environment where the Federal Trade Commission is the most antitrust of my lifetime. I can't remember more of an antitrust focus, and yet this concentration at record-breaking levels.
According to the National Federation of Independent Business, sentiment among small and medium-sized businesses is as low as it was during the 2008 to 2009 financial crisis. These businesses are struggling to secure funding as liquidity dries up, despite headlines suggesting that employment is stable and inflation is a concern. Cathie Wood disagrees with this optimistic outlook. She believes that lower-income households have been hit hardest by inflation and rising interest rates, resulting in sentiment levels comparable to the lows of 2008 to 2009. Wood also notes that even high-income sentiment is decreasing, influenced by rising unemployment rates, which have increased from 3.4% in January 2023 to 4% currently, and diminishing consumer savings rates, now down to 3.6%, a level not seen since 2008. Finally, Wood suggests that based on various warning signs, it might feel like the economy is already in a recession. For more Daily Dose Crypto news, check out these two awesome videos on your screen. Click now and we will see you on the next video.